Max Keiser. Time now to go to New York and speak with Warren Pollock, a semi-retired Wall Street executive who now blogs and blogs at wepollock.com. Warren, welcome to the Keiser Report.
Hi, Max.
All right, Warren, we've gone over the details of the MF Global crime scene a few times here on the Keiser Report. Tell us what you think is the bigger story of MF Global.
Right now, we're watching law being changed to selective interest, the interests of J.P. Morgan, Goldman Sachs, and the banking cartel. And what they're trying to do right now is set themselves up for a bank holiday. And what they're saying is that their speculation will always be subsidized by customer funds. And when you look at the amount of speculation which is in place, it's trillions of dollars versus real assets, which are only perhaps 1/100th of that amount. So when losses are sustained, which they will be through this financial crisis in Europe and in the US, the only source of savings that can be tapped is in fact customer funds. So we're watching J.P. Morgan in bankruptcy court trying to claw back customer funds and trying to change fact so that it can have priority over funds which were supposed to be segregated in the first place. And they're building a model for a global bank holiday in which we will see savings just basically raped from every person that has money in the system in a supposedly safe place, including pensions, bank accounts, brokerage accounts. And that's the process which is underway. It's the setting of precedent to steal people's money.
Now, Warren Pollock, you say that we're watching laws being changed for selective interests on Wall Street, but that's not new. That's been the story for 30 years, going all the way back to in the big burst of activity right after Reagan became president, and certainly after the savings and loan crisis. The lesson there that Wall Street learned was change the laws so when we do the crimes again, we won't get caught.
That's right.
So what's changed here? I mean, this is the same old story.
Well, what's changed is that the ability to sustain this looting and theft is running a bit thin. And the looting is rampant, and we're now at the point where we are in a totally lawless situation. And as we continue into this lawless process, things will start to destabilize. And what's so interesting with MF Global is that there is a physical world result to the MF Global insolvency. It's going to affect how farmers farm, how miners mine, how oil gets explored, and it's going to have dramatic implications in the physical world. And we're going to see a translation from this financial crisis into a physical world crisis. And that's all occurring because law is bent so out of shape that everything has become distorted. I would say at this point, we're at a point of maximum denial, where we have real world physical events such as Fukushima, which are not in the news, the fourth estate's not covering them, and this means that people are ignoring the obvious ramifications to this crisis in the physical world. And Fukushima, too, is a financial problem. They don't want to account for nuclear energy properly. They don't want to dispose of nuclear waste. They don't want to cost nuclear meltdowns into the equation. And that's how the whole system works. It works right now, since World War II, to concentrate wealth in the hands of a select few. And we've been watching the model that was established through empire after World War II slowly degrade and become non-functional to the point where we will see a physical world breakdown, and that will be expressed first through a bank holiday, which I think is on the near-term horizon.
Okay, so Warren Pollock, clients are demanding the MF Global trustees take action against J.P. Morgan, to which $200 million was transferred the day before MF Global declared bankruptcy. Any thoughts on J.P. Morgan's role in the crime?
Well, J.P. Morgan sent a letter out to MF Global, which MF Global was supposed to say that no, the funds that you're dipping into aren't customer funds. They never got a response from MF Global. So you think that their hands were in the pot in that regard, that they sort of never got the comfort level, but they went ahead and sort of took customer collateral. We know that the trustee has $1.5 billion that he has, which he could distribute. That would get customers about 90% whole. Yet he's holding back on those funds. Why? Because there's another MF Global entity called MF Global Holdings, and J.P. Morgan is trying to claw back across the balance sheet once again, and to grab that money from MF Global Holdings into the MF Global customer accounts yet once again. I mean, if Lou is free, managing a second bankruptcy. But this is all an accounting problem. When you have trillions of dollars worth of derivatives, a small percentage loss results in a debt that cannot be covered. So customer funds always have to be tapped in that regard. And it's not just MF Global. It's everyone that has a bank account at JP Morgan Chase, that has a bank account at Bank of America, that has a brokerage account that is hypothecated or rehypothecated. It's everyone that's living in the physical world that is reliant on an accounting system which is broken. You rely on oil, which is not properly cost accounted. We have U.S. military projection, $1.2 trillion a year in total, and that is not accounted into the price of oil. And we see U.S. empire breaking down in Middle East, North Africa. We see the U.S. desperate to try to keep global trade active. And we all monitor the financial aspects of this breakdown crisis because it's something that we can see. We can see the distortions caused by MF Global as JP Morgan and other entities try to claw back customer money that's not theirs to cover bad debt. What we don't see is the larger picture, which is that of total physical world breakdown, empire breakdown. Empire US is failing, and it is first going to be expressed monetarily with a bank holiday, and we're going to see that in Europe, and then shortly thereafter we'll see it in the United States. And I may be a little bit ahead in timing I was regarding mortgage-backed securities, but MF Global is a canary in the coal mine. And the same criminals are at work writing law to selective interest. Those are the criminals in the U.S. Congress, in the U.S. Senate, in the highest levels of banking. In MF Global, I was able to talk to everybody. I talked to people, Chairman Bart Chilton, I spoke to the chairman's lawyer at the CFTC. I reached up to the COO of the CME and had words with him. The only party that was not accessible to me were executives at JP Morgan Chase. And that's their strategy right now, is to stonewall, 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 and change facts selectively. And that's typical of the whole news cycle here in the U.S. Facts are selective. No one knows what the truth is. The truth is it's a breakdown crisis. We're watching Empire America fail. It's expressed monetarily first, and we're going to see that nothing is safe in terms of savings.
All right, so just to reemphasize this point that you're making here is that when the fraudsters and the banksters start mucking about and committing fraud in the commodities markets, oil, food, the wheat market, wheat futures, etc., this has enormous real life, real world consequences. It's a lot different than just, let's say, S&P futures contracts or currency futures contracts, where it's a lot of big banks and hedge funds are playing games with themselves and kind of financial masturbation, hoping to cash in on that game. But once it extends into real world commodities, then you have things like food prices skyrocketing in the Middle East and revolutions taking place. And when my understanding is that, or my observation, is that once food prices get to over 40% of income, you do have a revolution. In America, that's about 15%, but it'll shortly be at 40%, and we will see that kind of revolution in America. Now, you've written a letter to CME. Tell us more, you just mentioned it, tell us more about the letter. Who is the CME group? What's their role in this MF Global crime story?
Well, we have the CME, which is basically a marketplace, and then we have MF Global, and then we have the customers. And really, when you look at the CME, they were the primary regulator, a DSRO, and they were responsible for conducting audits and for also making sure that regulations were in place at all of these dealers. And as such, I think that they have a fiduciary responsibility or responsibility to MF Global customers to make sure that all their market participants are acting ethically. And what's so interesting is when I had talks with the COO of the CME, Brian Durkin, he said that MF Global customers weren't his customers. And I find that sort of an outrageous statement on his part. So my letter to the CME was to say, look, you have a responsibility not only to your member firms, but you also have a responsibility to everyone that is giving you commissions by making a market at your exchange. And they don't seem to have that connection in place. And that was my open letter to the CME to say, okay, wake up. What responsibility do you have to everyone else? And when you talk to all these big financial institutions, none of them feel that they have a public fiduciary responsibility. But when you look at the way they were all historically organized, we used to have mutual companies in place for insurance, New York Stock Exchange was a mutual company, the CME was a mutual company, and these companies could draw back on their member firms to make good for losses, and they no longer want to do that because they have stockholders. And the reason they have stockholders is because it was a profitable enterprise to take a nice, dodgy utility banking company and make it a public company. And we were able to concentrate wealth through the IPO process. We were able to concentrate wealth as stockholders. And everything is working against this idea that banking companies must be utility companies and they must provide a public benefit. And that's something which none of these banking companies and none of these finance companies understand because they've been allowed to speculate. And Glass-Steagall's Humpty Dumpty fell off the wall, and instead of Humpty Dumpty not being able to be put back together again, the foxes are just eating the egg that is broken on the floor. And that is where we are today as customers. We are the last person in line when these firms go bankrupt, and that is the precedent now being set by the bankruptcy court.
All right, Warren Pollock, you've